if the Austrian school is a proponent of a fixed base money supply,
Mhm.
then how does the rest of the economy function when you need that elastic supply of money on top in some senses? And this is, I believe, where bit credit comes in, and we can get to that as well if you want. But um, it really hit me hard. It's like, actually, if you did massively deregulate the commercial banking industries that exist today, and I could become a bank, and I happen to know that my producer is excellent at his job, and I'm totally willing to supply a line of credit to them to do some work in order to get paid later. Or equally, my editor is absolutely excellent, like skilled labor in that sense. Or equally, any business that has supply chain partners that understand each other better than any central planner sitting in a bank somewhere in a main city. It's like, do you know what? I'm going to front you the cash for this, and we'll settle later because I know you're going to supply what you say you're going to supply. Now, if they're wrong, they lose, and it's on them. But it seems
Exactly.
like such a good point, right? It's like, oh, well, the entrepreneur, like the human action, the individual can see the opportunity. Why wouldn't you want to promote the ability for that person to take that opportunity? And I'd love to hear your take on that, because it does get me very excited when I think about, we're so warped in a way. It's like, oh, there's allowed to be one central bank, and then there's like a handful of huge commercial banks that sit next to that, and that's how it is, mate.
Yeah, exactly. Yeah, this is a very valid point. So free banking, or let's say an improved form of free banking, um, is part of the solution. And as you said correctly, if one business produces something, particularly if it's part of a supply chain, yeah, you are a cotton field, who needs somebody else to produce textiles, who needs somebody else to produce T-shirts, who needs somebody else to print Bitcoin logos on the on the
Hmm.
on the T-shirt, yeah. You know that there is a chain of mutual dependency, of collaboration, division of labor. Yeah.
Mm.
So everybody wins along the chain. So if the cotton producer who put in already the work to grow cotton gives, let's say, 2, 3 months of trade credit to the producer of textiles, yeah, it's in his own interest if to grant this trade terms, if the textile manufacturer, for instance, cannot afford for liquidity reasons to buy the cotton outright and pay outright in Bitcoin, in gold, or whatever, which is actually always the case for economic reasons. Yeah, so trade essentially between the first producer and the final consumer always works on credit. Yeah, credit being capital in that sense. So somebody has to, so to say, forego immediate consumption, yeah, in order to produce something of a higher order good, as we call it. So trade credit is something very natural, and as you said, these people know each other. Yeah, if I'm a cotton producer, I know what's going on in the textile industry, and I know what the demand for T-shirts may be. So it's in everybody's advantage to grant this. And what happened was that the banks, so to say, sneaked into this to say intermediate that trade credit by producing credit money against it, which is a good thing because it powers that trade cycle. But the problem was that then there was the central bank monopoly. I mean, there were
Mm.
several problems, but the main one was that the banks were ultimately forced to use only central bank monopoly money for that instead of being free banks, which you just referred to, where they could print their own money. So that all of a sudden gave rise to essentially a Soviet style central planner in the middle of a market economy who could decide who gets money at what price for whatever monetary policy they happen to have in their politicians' minds. So that's the problem, how banking and central banking started to get into this supply chain. And today we have a situation where the fiat money system essentially blocks something like 2.5 trillion of international economy because of their rules, because of the bureaucracy, because
Wow.
of yeah, so it's all stuff which cannot happen in terms of trade, which makes everybody poorer. And the worst thing, it makes the poorest of the poor countries poorer because it's usually the banking systems and the monetary systems of the really poor countries which block this process. So, which means in those poor countries, people can't grow their businesses, they can't give work to people so they have an income to spend, which means the GDP per capita stays low. It's a real bad thing happening there.